Hello guys, my name is Moshi Ansari and today we are going to analyze Likhita Infrastructure. So basically we are going to analyze it is fundamentals and technicals. Let's start with the technicals. So basically it is a small cap company. So let's look at it is technicals first, then we are going to analyze it is fundamentals, right? So mm, okay. Look like we have to watch the weekly chart. Okay. So basically, the currently the uh, is at is currently the stock is trading at it is very lowest support. We can say it is at 241. It was initially going upper by day, and we can see that, and it has the support here too, right? From two levels, it is supported by here by this level. Okay. So the currently the Likhita Infrastructure Limited have two support at 240 and at around 230, we can say that. So basically, and it is going down day by day, as you can see from it is all time high. It is all time high. It is down by the around 50%. That's huge for any company. Let's start with it is technical fundamentals to understand why it is going down. We can say so. Basically, let's start with it is what company do. So, company business overview. We can say Liquid Infrastructure, the ISO certified company which is in the business of laying oil and gas supply, pipelines, infrastructure, and irrigation canals. Okay, constructing ocean facilities, building bridges over the canals, and provide maintenance work services to oil and gas companies throughout India. Okay, basically they provide services for the transportation of oil and gases. Okay, company operates in 19 states and 2 union territories. Okay, at present the company has laid around 1000 kilometers of oil and gas pipelines, including steel and medium density polyethylene networks, and 15,000 kilometers of 1500 kilometers of oil and gas pipelines on for ongoing projects. Okay, that's great. So let's start with it is ratios. Market cap is 951. Basically, it is a, we can say penny stock or a small cap. We can say that too. Okay, stock is 14, industry P is 20. That shows that it is quite below the industry. Return on capital employed and return on equity is quite great. Promoter holding is too high, and it shows the confidence towards the company, that is 20.2. The change in promoter holding 3.86, that's quite concerning. We will look at that later. Interest coverage ratio is good because the company have zero debt, we can say. EPS was for the 5 years quite good, and EPS for growth for the 10 years quite low, 6.24, that's quite low. Quick ratio is 4.77 and current ratio 8. We can say that company have too much stocks in it is inventory, that's concerning too. Book value is 94.7, quite and the current market price 241. That shows that it is around 2.5 around. Okay, sales growth 45 is quite good. Average dividend per payout 9.12, and if you compare with the stock price is 0.62. That's basically it is a small cap, so we cannot expect a huge dividend payout. So it's quite acceptable. EBITDA quite good because it is not company prices compared to its core profit. It is not that much higher. Okay. PEG ratio shows that it is quite undervalued as per its growth. Okay. Okay. So Let's analyze it is P along with it EPS trend. Okay, so basically let's start with it is peak. Mm, on Jan 21 it was having a 14p along with the EPS of 7, we can say 7. And in Jan 23 it was having a P of 17 with a EPS of 13. That's quite okay. On Jan 24 it was having a P of 17 along with the EPS of 16. That's quite acceptable. And then on Jan 25 it was having a P of 18 of with the EPS of 17.5. Like it is not going, they are not able to generate more profit, and now they are having a P of EPS of 16.17 and the P of 14. That shows that as per the P and EPS trend, it is quite undervalued. Okay. Basically, it comes under construction and civil construction. So, as we let's analyze the quarterly results. Says okay, year on year says we can see that it is doing quite good. We can say it is growing by double digit each and every year except this year, this quarter, June quarter. And let's say are they able to generate more, are they able to efficiently control their material cost or not, because it is material they are required to deploy a huge expense towards the material cost, right? So as we can see that they are not able to reduce the cost, even there it is increasing over there. That's a bad sign for the company. And employee cost is quite reduced over the years. Operating profit margin has been reduced because they are not efficiently able to utilize their material cost, right? Interest obligation remains zero because they don't have any loans and all. Profit. So basically from 22 it was they were having a, let's start with the net profit. They were having a net profit of 14, and now still they have a net profit of 14 crores. That shows that within 3 years they are not able to increase their profit and neither their operating profit margin. They have to do something with the operating profit margin. They have to reduce their material cost so that they can generate more margin with the same sales. Okay. Profit and loss statement, or we can say income statement. As we can see that they are still able to generate digit sales over the years on an average. That's quite good. And expenses like material cost has been reduced. We can see it is quite fluctuating. It is not reducing, it is quite fluctuating. And manufacturing cost is the main component here. We can see that it is also quite fluctuating over the years. And the operating profit margin, we can see that it has been increased over the years. That's good. That's why company is able to generate good profit from 4 crores to the around 17 crores, around 7 times. We can not 7 times, it is around 15 times. That's quite good, excellent, we can say. Now let's analyze the balance sheet of the company. Equity capital, we can see that the equity capital has been increased from here from 2020 because promoters have diluted their shares, their ownership. Reserve have been increasing over the years. That's quite excellent, from 12 to 300, no 350. That's quite huge reserve, we can say. Within the span of the 10 years they have generated huge amount of reserve, right? Borrowings, so basically long term borrowing, they have nil long term borrowings, and short also they don't have any short term borrowings too. Fixed assets, we can observe that they are quite doing capex for the in order to generate more fixed assets. Current value, there is no current value progress. They are also started doing investments. We can see that. Cash flow, as we can observe, there is no cash flow data. Okay, sorry, here we can see the cash flow data 45, 7 and around 56 crores, right? Cash. So basically, they have generated about 80 and 90, 80, 90, and 90, 180 and around 250. So basically, as we can say, they are not able to collect their cash efficiently. That's quite bad sign for the company, and they are also actually investing for the capex, and they are also generating cash through the diluting the shares. Debtor days, as we can see that debtor days also quite fluctuating. Inventory days has been increasing over there. That's a very bad sign for the company. As we can see, initially they were having a quite a good cash conversion cycle, but now it is increased over the years. That shows that company's net working capital is being tied up in the business. That's very bad sign for the company. Now analyze the shareholding pattern. As we can see that the company has diluted their share around 3.9 we can say, and here they have buyback some of their shares around 22%, 20.23%, and FIS are also increasing their no initially FIS increasing their stake in the company now, but now they have sold their stake in the company. Public has increased their stake in the company over the years. So overall the company is not doing well. So basically it is a small cap. We don't know what they are going to do in the future, because they can have any turnaround policy and all that can change their overall performance in the long term. So my suggestion is that company is not good for now to purchase the stock. So thank you very much for watching. Have a nice day.